Should we buy or sell digital realty trust? So first off, read this disclaimer carefully. So I am going to change the upload schedule going forward. So I will upload in the weekdays, so not the weekends. I actually looked into, I got some consultant to look at the situation, and according to Google Trends, the vast majority of searches on finance-related stuff happens during the weekdays. So I've literally been uploading at the worst possible time by uploading on the weekends. Okay, megatrends. So this is under a theme I call data centers. Very interesting theme. 35% here from the 52-week low, minus 22% pullback. So it is in a bear market. And we will look at digital realty. It's a real estate investment trust, 19% from the 52-week low. And we have seen a 16% pullback. So here's the company's website, enabling connected data communities, an industry manifesto. Okay, the word manifesto is a bit, it's rarely used, though it's a bit, it's a bit interesting as well, okay, I guess. But when and where you need us, leverage full interconnection capabilities across our global ecosystem, including cloud service providers, partners, networks, and customers that drive your business. So 280 plus data centers, 26 countries, 50 metros, and 6 continents. So definitively some pretty broad exposure here. So let's look at the map here. So they also actually have some data centers in Africa. So they literally cover the entire planet, it seems. Well, they don't have anything here in the Middle East at all, which I find a bit surprising. Anyway. So let's look here at the stock itself. So this is the long-term picture, weekly data points. So we do have some kind of time cycles here, but they have not been super reliable as of late, but the general patterns play themselves out. You see here when we zoom in that it does have a tendency to have these smaller time cycles as well. The problem here in terms of time cycles is that they have varied a bit in terms of duration. So here as an example, it's a bit clean, rise, decline, rise, decline, rise, decline, rise, decline, rise, decline. But here you see that this rising phase was very abrupt, and then we pull back very quickly to the blue 100-week moving average. And the blue 100-week moving average is definitively the level to watch going forward, because support, 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 support. So it's been a very good risk-reward opportunity for bulls, but there is a but. There also have been times where it turns into a resistance level. So that is just something to be aware of in terms of that level. So far, it's been working out. So this is a decent risk reward for the bulls, with the caveat that, as we see back here, when we get stuck below that support, then it can be more stubborn. Looking at the daily data points, we are below the 200-day moving average, but we see that the 200-day has simply not been, it's not been offering good signals, at least for the bulls. For the bears, it's been actually pretty good. You see here that the bears have quite actively used that as a short level. Like here, the bears were shorting, short. So for the shorts, it's been working well. Okay, so let's look at these other indicators. So in terms of RSI, weekly RSI, we are at a low level that many times have formed lows on the chart as well. In terms of the PPOs, we see something a bit similar. Looking at the daily data points here, we recently got extremely oversold here on the daily RSI, and we reached the levels that if you look here at the previous time, we had this very super oversold level back here. This formed this right here formed a key low that was a decent risk reward for the bulls. Yeah, I mean, this looks interesting. when we look here at, the seasonality for the stock, so over the last 5 years, then February has been weak, but March and April are ridiculously strong. The last 10 years, the same thing, February weak, but then March, April strong. And then we go big picture, 19 years. Then February is actually not really that weak, so it closes higher 59% of the time, and March and April are really, really strong. So the strongest months are on the horizon, which means that from a short seller perspective, it's risky, to go short when you have this monster strength the coming months, especially when we are at, a long-term support level. So here is Finviz. No trend lines in play at the moment. When we go here to SAX, we do see that it has a number 3 hold, D-value, D-growth score, but a B momentum. Industry rank, bottom 39%. And so the dividend yield is 3.12%, and that is pretty decent, because this is data centers, so you get a good yield on high tech, which is rare. Market cap $42 billion US, so definitively not a small cap. If we go and look at what the insiders are doing, then we do see that there's been 4 moves so far. Sell, buy. We don't have any transaction volume here on the buys. Okay, I'm not entirely sure, but you see that sometimes here we have like not available, so. But at least there's been some moves. When you look at the number of shares, like this was accumulation, and this was by Corey Dyer. He is Chief Revenue Officer, so he knows a lot about the business fundamentals. So he bought, 5,653 shares. That's significant. Okay. If we go here and look at consensus estimates here, so 24 analysts are covering the stock. So the average price target is 15% above, highest target is 31% above, and the lowest target is minus 13-ish% below. So overall, they are definitively bullish. So here is the seasonality for the stock. So we do have a 77% positive with the S&P 500, 43% with IER, which is the real estate ETF. And then we have minus 47% with the dollar index. Okay, so let's get daily data points. So we can't get that. Maybe we need to do it like this, and then by miracles we get it. Okay, so daily data points, this is shorter term correlations. So 71% SPY, 80% the real estate ETF, and 82% with the VPN. So VPN is the data center ETF. So there is a way to get diversified exposure to the theme. 42% here from the dollar index here. So let's actually do a quick technical analysis of VPN. So we have to use daily data points. Yeah, because what happens to the VPN ETF, it has a high probability of having an effect on digital realty. So the first this one is messy because we had the potentiality here of having like a double bottom, like boom and boom, but as you have seen here, there's been some selling, so the bears have pushed a bit down. So the double bottom, it's sort of broken. At least there's going to be far fewer that look at this chart and go like, oh, we have a double bottom, because they can clearly see that this candlestick in particular, it did close below this level, a bit too much below. So that was unfortunate. Looking here, we got extremely oversold, so definitively due for some mean reversion. MACD just got ridiculous. Yeah. yeah, it is what it is. But if I were to sum up my take here for this stock, I think we have a very clear line in the sand in terms of the 100-week moving average in blue. It's a very clear support level in play at the moment. So the bullish thesis is contingent on that holding. If we lose it, then it can quickly become resistance, and that obviously would not be good. Seasonality is really bullish, except that February is weak, but the ferocious strength of the coming months, and also given that January tended to be strong, but we have seen weakness this time, so maybe the strength of that we usually get in January has now been pushed into February. That's a possibility. So overall, looking at the fundamentals, you name it, I think there's more reasons to be bullish here than bearish, but the bullish thesis is definitively contingent on support holding at the blue 100-week moving average. That's a nice stop level.